Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 17th of August. All right, now as we come into the start of the trading week, the dollar, I've got the dollar index here, pretty, well, if anything, it slightly still sort of looks like it wants to go down, but you know, the more aggressive down move we've been seeing the last 5 or 6 weeks has started to neutralize itself and trading sideways. So there's bits and pieces. The news services are trying to get the market engaged in the macroeconomics. You've got the Japanese GDP figures here, slightly weaker than expected. Now they're sort of probably coming back and trying to sort of do their job and say, well, you know, Japan's economy shrinking, etc. But the general news is a little bit, well, it's hard to work out where the dollar goes from here looking at this news. There's the bit of an update on the Japan's GDP numbers. And otherwise, like this headline here, US dollar slides post worst weekly run of losses in a decade. I mean, they're just creating, like there's no big story to that. And then if anything, you got dollar CAD sort of whipping around with oil. New Zealand PM has postponed the election by 4 weeks. So what we're sort of seeing is at the moment, let me just bring you back over to the major currency pairs. So the week before, okay, we had really nice trading conditions or situations where the US dollar had very clear direction, makes it easy to work out what's going on. At the moment, the dollar isn't uniformly behaving the way it should across the board. If anything, you've got dollar yen just dribbling lower through that support trend line. Dollar CAD's slowly coming up. So once again, two opposing moves on the dollar. You got dollar, or sterling, I should say, you know, popping above that short-term resistance line. Now with that, you just basically, that's sort of basically out of the game. So you delete that trend line. Euro wants to go a little bit higher through this 118 sort of 50 level, but I tell you what, there's resistance above that. Aussie's sort of just shifting to the top side to start the week. I've been looking around for some clear news on that. It's almost started to move. It might be an Aussie Kiwi move. Kiwi itself isn't really moving on Ardenn's, you know, announcement that the election's been pushed back. So with those pairs, you can see there's a bit of a mixed plate here. Now, this is not uncommon for a Monday, right? We're waiting for the markets to reconnect after the weekend. There's usually lots of varying geopolitical news that needs to be factored in. So it's just, you know, in this day and age, it's pretty wise to sort of take your time coming into Monday, get your analysis up to speed. Thin market liquidity is very common place for Mondays. And there's a slight risk-on profile with the equity markets, US equity markets closing a little bit higher, just a smidge on Friday. Now, coming into analysing the market itself, okay, looking at the major pairs, we've still got a few of these lingering long-term trends, which are sort of coming back into play, but we are missing a lot of the short-term drivers, right, where that momentum really kicks in. And once the, you know, the short-term trend gives us sort of potentially the entries, and the longer term sort of makes it you're very confident to get into those trades as well. So at the moment, not a lot. If anything, the Kiwi looks like a little bit of a shining beacon at the moment, worth keeping an eye on as you come into Monday. Now, when I say the Kiwi as well, this is for some traders who've been asking me, if the Kiwi's got clear direction, you would automatically go to the Kiwi crosses and see what's going on there. And you might find some diamonds in the rough if you are having a look across those instruments. Now, this coming down, obviously no trades for Monday. We do have a bit of data this week. It's a good idea to go through the calendar, whichever calendar you use, and sort of to start to piece out where potential impact could come from. Obviously, the CPI numbers, traditionally, you know, one of the most important numbers. At the moment, we know that the macros aren't really coming into play. It doesn't mean that these can't add a little bit of influence. It's worth just keeping a little bit of an eye on. FOMC minutes, the ECB monetary policy meeting accounts, and then you come back down into, you know, sort of core structured macroeconomic data. Normal market conditions would be pretty, be frothing a little bit at the week, as with all those CPI numbers. But as we know, we've got to look at the market with a different set of eyes and make sure we are covering the sort of momentum that's coming out of the random geopolitical events. And that's pretty much it for me, guys. There's not too much more to go through. Let the markets open up, get your charts drawn up, and then we'll go from there. Cheerio.